Elong Power Holding Limited, ELPW, has become one of the most aggressively debated microcap names in the market after an extraordinary volatility event that checks nearly every box for speculative excess. The stock erupted into a 3,000 plus percent intraday surge on January 31st, driven almost entirely by retail momentum, social media amplification, and the dynamics of a thin float with elevated borrow costs. That move catapulted ELPW into lottery stock territory, where price discovery temporarily decouples from fundamentals. However, the narrative shifted violently on February 2nd, 2026, when the company disclosed a plan to issue 6.67 million units at an effective price of $0.00016 per Class A share, paired with $1.20 exercise warrants, to raise up to $1 million for general working capital. The offering price sits orders of magnitude below recent trading levels, instantly introducing extreme dilution risk and a massive psychological overhang. This timing, coming just days after a parabolic retail driven run, has fueled accusations of a classic pump and dump structure, while others argue the setup still has short squeeze characteristics given the 232.5% borrow rate and structurally stressed short positioning. The result is a stock now trapped in a violent reversion phase where liquidity providers, not fundamentals, dominate price action. January's plus 666% monthly gain has already been largely unwound, underscoring how unforgiving microcap momentum reversals can be once dilution enters the equation.
Okay, so the stock is down, let's see, 2% already. This is from Monday, the 2nd of February. Okay, we have what we have here on its extrapolation is saying that this weakness may remain in place up till at least the Thursday, the 5th of February. Okay, and projections are saying currently $2.87. So we have been able to get at the data we have on that 4-hour chart. And these are the things we have R1, a resistance, obviously. 5% to 30% probability of it retesting those. And all these other ones. Support levels. We have 1.27. Where is that right now? It is at okay, 2.45. 65 to 70% probability of printing that. 1.3. Okay, negative values. Okay, yeah, obviously stocks don't print negative values, so Claude didn't understand that those are not possible. Yeah, okay. Most likely trading range next 5 to 10 days, 1.23 and 5.93, 80% confidence interval. Price pressure momentums. Okay, these tell us what the um, how the moving averages are either appreciating or depreciating, and also the angle of attacks, and they also come with buying pressure and the pace, the buying or selling pressure, and then the pace of the buying or the selling pressure as well. So the 10 period moving average extreme bullish trend. Okay, we're giving this 89.05. It's gaining based on the indications, even though the stock is down. You can see here it's still gaining 80, it's still getting roughly $70 every 4 hours. That's just an indication, based on what has happened. It doesn't mean that that is absolutely the case. Interpretation: the 10 period moving average gaining to $9.05 per 4 hour every 4 hours on sustainable parabolic trajectory. First derivative to 89.19 acceleration is massive, but the second derivative is negative. Deceleration is beginning, momentum peak likely past. Implication: parabolic exhaustion imminent. Expect a sharp moving average contraction. For the 21 period moving average, extreme trend mode as well. First derivative 104.15, upward momentum, negative second derivative, significant negative, rapid deceleration on the way. Implication: intermediate trend losing steam rapidly. 40 period still trending as well. Second derivative is negative momentum fading. Implication: the moving average near 1.66 represents a more stable value zone. And then if the 200 period moving average is severely bearish, negative value, both derivatives are negative, long-term downtrend intact at $2.78. Implication: current price at 12% above 200-day moving average, despite being in a primary downtrend. Okay, ppm synthesis: negative second derivatives across all short and intermediate price pressure momentums indicate the parabolic move is exhausting. The massive ppm one value of 89.05 is mathematically unsustainable. Yes, expect violent mean reversion as the moving average decelerates. Okay, these are the extrapolations of the 40 period moving average and the 3 period moving average: 46.6% below current price, 3.3 sorry, 8 $3.3, 8.4% above current price. Interpretation: short-term models expect a minor bounce slash consolidation. Intermediate models project severe reversion toward 1.66, converging with the 3-day moving average. Sorry, converging with the 40 period moving average. This creates a binary outcome scenario: either dead cat bounce to 3.37 or up to $4 range before collapse, or immediate capitulation to $1.66. Okay, volume and float analysis. Okay, yeah. Borrow rate implications: short squeeze potential if buying pressure returns. Forced short covering could spike price, but also indicates a massive bearish conviction. Dilution impact analysis. Raising 1 million. Okay, shareholder debt destruction. Yeah. Creates immediate arbitrage opportunity for offering participants. Warrants at 1.2, 61% below current price. Okay, trade setups: no guarantee that if you apply these setups that you will succeed at all. Okay, current entry will be around $3.3 this is a bearish one. Yeah. Okay, you can always pause and read. And dead cat bounce from 2.8 to $3. Yeah. So your stop loss will be around $2.5. What are the targets? Do they have any target? There are no targets here. Okay, target will be stop loss. Okay, target will be 3.6 to 4.2. And then long term setup, the entry zone will be 0.5, 0.6 to 1.27. Targets will be 2.5 to $3, 4.5 to $5.938 plus. Yeah. Big risk factors: delisting risk, bankruptcy risk, trading halt risk, liquidity risk, fraud risk. Don't trade if you cannot afford 100% loss. Conclusion: ELP is a parabolic exhaustion is in a parabolic exhaustion phase with a 70% probability of reversion to $1 to $150 range within 30 days. Okay. Recommended strategy for most traders: avoid or short at current levels with strict risk management. This is a casino trade, not an investment. Yeah. Okay, see what you make of ELPW, and thank you very much for watching this video.